Welcome to the deep dive. We try and make sense of the complex stuff.
Hopefully simply.
Exactly. Today we're tackling trading orders, specifically on the NSE, the National Stock Exchange of India.
Yeah, it can feel a bit like Jargon City sometimes, can't
It,
it?
it really can.
Yeah,
But getting the hang of these different order types, it actually gives you a lot more control when you're trading.
absolutely. It's like knowing the rules of the road before you drive. Essential stuff. Our mission today is just to break down the main ones, make them clear.
Sounds good. We're looking at materials that explain the core buy and sell orders used in India. So we'll dive right in. Basics first. Buy and sell orders.
Okay, so a buy order, pretty straightforward, right? It's you telling your broker, I want to buy this stock.
Because you think the price is going up, presumably?
Usually, yeah. Now, the how is where it splits. You've got your market buy order. That's basically saying, buy it for me now at whatever the best price is, quick and dirty.
Get me in, basically.
Yep. Then there's the limit buy order. That's more specific. You say, I want to buy, but only if the price is at or below this level I set.
Ah, okay. So let's use an example.
Hmm.
Say Reliance. It's trading at maybe 2,500.
Right.
If you just want it, now you hit market buy. But if you think, maybe it'll dip to 2,450 first, then go up towards my 2,800 target.
Then you'd set a limit buy at 2,450, and crucially, it might not fill if the price never drops that low.
Okay, makes sense. So selling just the mirror image.
Pretty much. A sell order is telling your broker to sell shares you own, could be to lock in profit or maybe cut your losses if things go south.
Same choices, market sell and limit sell.
Exactly. Market sell means sell it now, best available price. Limit sell means sell it, but only if the price is at or above the minimum I've set.
Right. So back to HDFC Bank. Maybe you bought at 1,400. It's now for 1,600.
Nice trade.
Market sell gets you out instantly at around 1,600. But if you're hoping for, say, 1,650,
You set a limit sell at 1,650. Again, no guarantee it hits that price, but you control your minimum selling point.
clear. Okay, let's move on to stop orders. These sound conditional.
They are very conditional. Stop orders basically lie dormant until the stock hits a specific price that's your stop price. Then they activate.
Okay, so buy stop first. What's that for?
A buy stop order triggers a buy if the stock price rises above your start price. It sounds a bit counterintuitive, maybe.
Buying when the price goes up.
Yeah, but think about breakouts. Say Infosys is trading at 1,800, but it keeps hitting a wall at 1,850. That's resistance.
Uh-huh.
You might think, if it can break through 1,850, it might really take off. So you place a buy stop at, say, on 1,860.
So it's like an entry trigger for upward momentum.
Precisely. If it hits 1,860, your buy order activates.
Got it. Now, sell stop orders. I think I've heard these called stop loss orders more often, especially on NSE.
That's generally right, yes. A sell stop order triggers a sell when the price falls below your stop price. This is your main tool for risk management.
Protecting profits or limiting losses.
Exactly. Let's say Tata Motors. You bought at 600, it's now 650. You're happy, but nervous it might fall back.
Right.
You could set a sell stop at 620. If the price drops to 620, boom, your sell order triggers to get you out before it potentially falls further.
Okay, so stop loss is basically a type of sell stop. But then there's this SLM and SL distinction. Stop loss market versus stop loss limit. What's the difference there? That seems important.
It's crucial, actually. It's about what happens after the stop price is triggered. With SLM, stop loss market, once your start price, say 420 for ITC, is hit,
Okay.
it immediately turns into a market order. Sell at the best available price right now.
So execution is almost guaranteed, but the price might slip a bit lower than 420 if the market's moving fast?
Exactly right. You get out, but maybe not at the exact start price. Now, SL or stop loss limit is different. You set two prices.
Mm-hmm.
The stop trigger price, again, maybe 420, and limit price, say 419.
Okay, two prices.
So when the stock hits 420, it triggers a limit order to sell, but only at 419 or better.
So you control the minimum price you'll accept, 419 in this case.
Correct. But here's the trade-off. If the price gaps down really fast, say it jumps straight from 421 to 418.
Your limit order at 419 might never get filled.
Precisely. So SLM prioritizes getting the trade executed. SL prioritizes the price you get, but execution isn't guaranteed. It's a key choice you need to make based on the situation.
That's a really helpful distinction. Certainty versus price control.
Got it.
Now, there were a few others mentioned quickly. Trailing stops, GTT.
Yeah, just briefly, a trailing stop is quite smart. It's a stop loss that automatically moves up if the price moves in your favor.
So it locks in profits as they grow.
Kind of, yeah. It trails the price by a set amount or percentage. Then there's GTT good till triggered. These are orders that stay active for potentially a long time, maybe weeks or months, until the price condition you set is met or you cancel it. Good for long-term entry or exit targets.
Like setting a low buy order for a stock you like, hoping for a deep dip someday.
Exactly. And bracket orders, or BO, they bundle your main order with both a target profit order and a stop loss order. Very popular for intraday trading.
All in one package.
Yep. And finally, AMO aftermarket orders. You can place these when the market is closed, and they get queued up for execution at the market open the next day.
Useful if you can't trade during market hours.
Correct.
Okay, wow. So quick recap. Market, limit for basic buys and sells. Then the conditional stops buy, stop for breakouts, sell stop, often called stop loss for protection.
Uh-huh.
And within stop loss, the key difference between market, SLM, for execution certainty, and limit, SLA, for price control.
Perfect. And then the others like trailing stop, GTT, bracket orders, AMOs offering more specialized functions.
It's definitely a toolkit, isn't it? Understanding these seems, well, pretty fundamental for trading effectively on the NSE. Gives you control.
Immense control over your entry, your exit, and especially your risk. It's a big step up from just hitting buy or sell.
Right. So here's something for you, the listener, to think about. Based on what we've discussed, how do you trade, or how might you want to? What's your tolerance for risk? Which of these order types feels like it might be most useful for your approach right now?
Good question to ponder.
Definitely. That's your deep dive thought for today.
Thanks for joining us.